The U.S. Senate on Tuesday voted to move ahead on a bill aimed at boosting the U.S. semiconductor industry and improving competitiveness with China. Small in size but big in value, semiconductors have become an essential component at the heart of economic growth worldwide and a geopolitical focal point between the U.S. and China. So what impact might the bill have, if passed, on the global semiconductor industry? And will U.S. efforts pay off to bar technology from reaching Chinese chip makers? I'm pleased to be joined from Beijing by Zhang, Associate Professor at Beijing Normal University, and from Indianapolis, the United States, by Craig Seidelson, Assistant Professor of Operations and Supply Chain Management at the University of Indianapolis. Gentlemen, welcome to The Point. So the very latest just came in. The U.S. Senate on Tuesday voted 64-34 to move ahead with a slimmed-down version of a legislation to provide up to billions of dollars in subsidies and tax credits for the semiconductor industry in the United States. And people are saying this is setting the stage for potential votes to pass the legislature in the Senate and the House of Representatives by the end of next week. Professor Zhang, exactly what is this bill all about?
So it contains the stipulations to set up several funds to basically subsidize construction of fabs, the semiconductor manufacturing, chip manufacturing plants in the U.S. It's $52 billion in that, including overheads, and then another 20-some billion in tax credit for buying equipment and all that. So essentially, it is just a subsidy for U.S. companies, especially Intel, for example, to set up the plants.
Professor Seidelson, the bill is a condensed version of a $250 billion bill the Senate passed in June last year, but that bill has faced a filibuster and no final decisions have been made. What exactly happened with that bill and why?
That was a $250 billion bill. I think that was called the Innovation and Competition Act. And of that $253 billion, 200 of it was specifically earmarked for competition with China. As you said, that has been stuck since last summer without moving forward. The bill had passed, but the funding hadn't. So Commerce Secretary decided to move forward immediately with a slimmed down version of the bill, which both the House version and the 2022 House version and the 2021 Senate version both shared. So the expectation was, if Commerce Secretary can move forward with just the slimmed down version that was common to both, they could get a vote before the August recess of Congress.
This latest bill, or the slimmed down version, is dubbed, or the original version actually, is dubbed by some as a CHIPS China competition bill. Professor Zhang, does that explain the urgency of the lawmakers to push forward this bill? Is the U.S. government trying to contain China's semiconductor industry?
Well, China is sort of a catch-all for all the boogeyman. Whenever people want funding, they evoke China. The U.S. military does this. They call China the pacing challenge. In reality, this bill really doesn't have too much to do with China. China is growing fast in semiconductors, but currently it's in the trailing edge, not the leading edge, not the cutting edge. And in that area, the U.S. is still dominating. The U.S. is lacking in the leading edge, and their competitor is really South Korea and the Taiwan region of China, really. And also the reason why China has been going so fast is because of the U.S. sanctions. They carved out the Chinese market for the Chinese manufacturers, and they're now lifting that sanction. So this has nothing to do with China. This is just it's the semiconductor makers trying to get some subsidies, and there are some excuses for it. For example, if war breaks out in the Taiwan Strait and America is not going to get chips from Taiwan, then their military can go ahead. But in fact, the military uses older generation robust chips, and U.S. dominates in that. So all the excuses they push out really doesn't go to the core. The core is just somebody trying to get the subsidies, in my opinion.
Professor Seidelson, your take on the issue?
Well, as I understand, the procedural vote that happened this week, one of the issues was under the CHIP Act, if any company receives money from it, that they couldn't invest any of that money in China. So I guess I do see a Chinese aspect to this, but I am in agreement that the predominance of chips being manufactured in China are the older generation, but the supply chains are complicated. Most of the US companies that have chip manufacturing capabilities are manufacturing the front end of those chips in the US, but they're doing the assembly, packaging, and testing in China. So a wrinkle in this bill is, does it complicate supply chains? Is it still going to be possible to do the assembly, testing, and packaging in China because it's not economical to do those in the U.S.?
So basically, it's slightly complicated as well. But to pick up what Professor Zhang said, we know that economies in Asia are currently the biggest chip producers. For instance, 75% of manufacturing occurs in Taiwan, China, and South Korea, Japan, and China. But China has been investing heavily on the chip industry, especially chip innovation.
China's growth has something like 30% year on year for the past 5 years. So I think pretty much 10% of the chip market is made in China, and China is expecting to double that over the next 10 years.
What I was saying, basically, the mere fact that China is boosting its own chip innovation and manufacturing is precisely the result of U.S. sanctions, right? The U.S. imposed chip limitations to China, and now the United States is seeing a problem with mainland China's efforts to catch up as a result of their export controls. Professor Zhang, do you see a problem there? I mean, I see this as a problem that's self-created by the United States.
Right, and it's going to get worse because China actually accounts for 60% of the entire global semiconductor market. So the U.S. not only stopped its own companies from selling to China, but also other companies from other countries to selling to China if they have any equipment that contains any little bit of U.S. technology in it. So in essence, they're forcing, if they don't want to give up the Chinese market, they're being forced to get rid of the U.S. to de-Americanize their technology. So that's one thing. Another thing is, by this bill, they're building new equipment, new fabs in the U.S., bringing extra capacity. So despite whatever people say about semiconductor shortage in the past 2 years, in the recent weeks, the semiconductor prices have been dropping like a stone because of the glut of capacity coming online. So all this extra capacity will be competing with Taiwan, will be competing with South Korea, will be competing with Europe on the remaining 40%. And by that time, the US, if it wants to survive, it has to do something like what it did to Japan in the 1980s, trump up some anti-dumping stuff and try to kill off the South Korean and Taiwanese industries. So that would really disrupt the global supply chain, in my opinion. Yeah.
Right. We actually have been looking at fluctuations, to say the least, or shortage of chips in the global market because of all kinds of reasons, geopolitical disputes, the pandemic. So Professor Seidelson, do you think such a kind of bill is going to help with that situation?
I think we have to look at the $53 billion and put it into perspective. If we look at the three largest chip companies, TSMC, Samsung, Intel, their investment in 2021 alone was something like $100 billion. And we're talking about a $53 billion project for all of the United States. So, and if we compare that to China, Chinese investment 2014 through 18, we're looking at probably $30 billion a year. So it's a $53 billion is nice, but is it really going to redefine what's going on in the markets? I don't see that.
So basically, you're saying this is a drop in the bucket of what the United States needs to boost its semiconductor industry?
Yes.
Professor Zhang, what do you think of this argument? Because basically the United States has been criticizing China for so-called unfair trade practices, right? These state subsidies or industrial policies or all kinds of incentives from the country, from the government to boost a certain industry, calling China state capitalism whatsoever. And now, basically, are we seeing the US copying what China is doing to boost certain industries?
Well, it's kind of do as I say, not as I do situation, and they're not really copying China. They invented the game. I mean, in the 1980s, the Japanese took over the entire semiconductor market, and the U.S. had to push them out. One of the things is subsidy from the Department of Defense through the DARPA fund, setting up something called Sematech, and also in Japan, in Europe, there's a European Chips Act as well. So this sort of thing is widespread subsidies. It's not even the problem as the other guest just mentioned. It's a drop in the bucket. People might just set up a symbolic factory, grab the money, and then do it elsewhere anyways. But the main issue is they have other things that they can do. For example, as I mentioned earlier, in the 80s, they basically forced Japan to give up the market by saying that they're dumping, and they can't dump not only into the US, but globally. And they have to open up a guaranteed 20% of their domestic market for the US. That kind of coercive measures, in the end, really completely destroyed Japan.
Is that going to
trade.
succeed with China? Is any such attempt would succeed with China as a much bigger market?
Well, they've already been trying to curtail anything that China can do. But the thing is, with Japan's example, the East Asian economies will probably be very cautious about folding. so I don't foresee that they're having the effect that they intend, but it doesn't stop them trying. And so I see more chip wars going forward,
right.
Unfortunately.
Yeah. One last question, because since the last time the United States imposed sanctions on chip exports to China or provision to China, how much has China progressed in terms of innovating its own chips and investing in the chip industry in what a lot of people call the chaoboards? You know, you're being choked in certain core technologies. Basically, you're forced to rely on self. How much progress has China made because of the US measures?
Right. Is that the answer? Right, I'll answer it. So basically, before that, China doesn't have much of a semiconductor industry.
Right.
Graduate students, they go to software platforms. They pay a huge amount of money. The microelectronics students, there aren't any. But all of a sudden, because of the U.S. sanctions, there are a lot of funding going into all sorts of chip design companies in particular. This is one thing that China has done really well, is to design specific purpose chips. And then also in terms of manufacturing, also there are many steps in making a computer chip. And there are Chinese companies, Chinese competitors, 3 or 4 of them for each single category. And also specialized gas, specialized chemicals. Mm-hmm. So that is, in the world as a whole, no country has that kind of complete coverage on everything. Actually, that's happening in China. Although they're not the leading edge, they're 1 or 2 generations behind the leading edge, but they're going up fast and they're competing against each other. So I foresee pretty good progress in the future because it's not new technology. People have already done it. They've proven it can be done.
So
it's just a matter of doing
basically, the idea that a lot of people criticize China for relying on itself, you have to understand why China are forced to do that in the first place because of restrictions and sanctions from the outside. Anyway, we have to leave it there. Many thanks to Zhang Fan, Associate Professor at Beijing Normal University, and Craig Seidelson, Assistant Professor at the University of Indianapolis.